Hi, everybody. It's Nick, CEO of ILUS. I just thought I'd come today with a little bit of an update and lead you into an update from JP on the operational sides of the business. My part is particularly around, let's say, the strategical and macroeconomic view of, where the economy is going in terms of which affects our business. Luckily, we're very well positioned for this, which I'll tell you a little bit more. Please note that this is not financial advice. It's not investing advice. I'm not an economist. This is my own opinion of current conditions. I would like to think it's an educated opinion, but please don't take this advice as any, form of official. So basically, I think we are on the brink of what could be a really big recession, maybe a long and deep recession, which is usually quite a good reset for the markets. It's obviously a very painful period to go through for most people, but it's not the first one and it won't be the last one. And it's really how we deal with it. Usually from a recession, the strong come out far stronger the other end, having eaten up all the opportunities that were presented. And certainly a recession presents a ton of opportunities, which is, the way we are trying to look at this from our position and position ourselves and get ourselves in the position to be able to swallow up every opportunity that makes sense for us to add value for you guys. My view on this particular recession is that, I'm not really fussed about the particular word recession. Let's just call it a reset of the economy. I think this one is slightly different to previous ones, in my opinion, based on a number of things. One, we are sitting, the US people are sitting with, probably 2.5 trillion of savings that they never had before. However, that is slightly misguided because it's really the upper end of the market are sitting on those savings. So, usually with the inflation problem, when interest rates are increased, quite quickly that sort of starts to claw back inflation rates when interest is increased. However, on this instance, where people are sitting with 2.5 trillion of saving, in my opinion, I'm not sure heavy interest rates are going to have a very quick direct impact on inflation, but I guess time will tell. However, what it does impact is obviously the, let's say, bottom half of the market who are not sitting on these type of savings. And, so while the top end will continue to spend and just accept that they have to pay more, as we said, in a recession, there's more opportunities. So they're more liquid. They're able to jump onto opportunities quicker, and they will. So during this period, they're likely to make more money, not less. So I don't see it slowing prices, certainly of sort of the upper end of goods, which I think is what they're expecting. The economists are expecting from a normal interest rate increase. Anyhow, what we're likely to start seeing, and what I think has already started to kick in, is consumer borrowing. Let's say that bottom half is going to start to hammer their credit cards and hammer short-term personal loans in order to basically survive and cover this high inflation of more expensive life that is just occurring daily and daily. Your food and petrol is becoming more. So which then naturally is going to lead into what I believe is going to be a real painful a recession, because the interest rates increases is really affecting this bottom half of the market, which are starting to borrow hard to survive. But in reality, I don't think it's going to slow the inflation, which really is the worry for me, because I don't believe this inflation is totally caused by a surplus of money from quantitative easing, which was previous scenarios. I think the direct impact of this inflation is heavily around supply chain. And I don't even buy the story that it's relating to the war in Russia with Ukraine, or the war in Ukraine with Russia, and direct fuel prices. This problem's been going on and spiraling out of control for the last sort of, 9 months or a year, maybe 18 months. Supply chains are an absolute disaster. We obviously face this supply chain issue on a daily basis. Where we can't get pumps, we can't get chips for certain control panels, we can't get fittings. The fittings are delayed because of this and X, Y, and Z. Shipping prices have gone through the roof. And their shipping prices are not necessarily totally dependent on fuel prices. The shipping prices, again, have been going up for more than a couple of years, basically since COVID started. It's due to supply and demand. It's due to shipping containers. Certainly from our part, and I know America's facing the same thing, historically shipping containers would leave China full with goods being shipped to America or Europe or the Middle East. they'd be unloaded, and there would be potentially borderline an equal amount of products going back, whether it was food or commodities or, whatever was being shipped into China. And it was always that balancing act that was the tricky parts for the government. However, when most of Europe was shut down and most of the world was shut down, China was still supplying items. So the containers were going to Europe and going to America full, and then nothing to go back because the factories were all shut. So there's kind of a whole distribution channel issue of containers in the wrong place, empty containers, full containers, somebody's paying for empty containers. China's had tons of lockdowns, so stuff's not been coming out of China. A lot of the high-end Chinese, even if stuff is made in China, they still have raw materials from Europe, which has not been functioning. So supply chain, and there's 1,000 other influencing factors in the supply chain, so don't take that as a conclusive list. But supply chains in all are a nightmare. So while there's a nightmare of supply chain, prices are going to go up regardless of what fuel's doing, regardless of what oil's doing. I mean, I'm pretty sure every single one of you, and certainly I have, every single one of you have been into a shop to try and buy a t-shirt, a pair of trainers, I don't know, something for your kitchen, and they don't have stock. They don't have the small, they don't have the large, they've only got this, they've only got an old style, blah, 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 which means you have to pay more for what you can find, regardless of fuel. So I don't think, in my opinion, I don't think this interest rates is going to have a direct a direct or certainly a quick impact on inflation. Again, just my opinion. But naturally now with the interest rates, what we're likely to see, higher interest rates, which is going to affect those people, the bottom end of the market, which are borrowing, which will naturally start to affect property prices. Property prices will drop. That'll hit people's equity. As soon as it hits people's equities, the banks start to feel it, and slowly that snowball starts to spiral. But it still doesn't affect, in my opinion, it's not going to affect that top end of the market, which is sitting on humongous savings. Certainly from a commercial point of view, we're not seeing a shortage of cash. All the funds that we talk to, all the family offices we talk to, they are sitting on piles and piles of cash that they need to deploy, which is ultimately a good scenario for us. And we form incredible relationships with these people, who are willing to support us and like the business model and like what we're trying to do. So we believe we're pretty well positioned for this recession, or let's say reset. And we also sort of, let's say, bolting down the hatches that this may be a long drawn out process, because the governments around the world don't have the ability to just quantitative ease their way out of the recession. So, let me talk you through our business and how sort of the direct impact of our business is that we're pretty recession proof, I would like to say. We're not recession proof, nobody's recession proof, but we're pretty recession proof, being that our businesses are the fire and safety sector goes on regardless of what the economic condition is. Ironically, when there's a recession or when there's a cutback in people spending money on maintenance and things like that, there's more fires. Therefore, and that people are buying cheaper equipment, cheaper compliant products. They're not doing the in-house factory maintenance as well as they used to. Therefore, the fire risk gets higher. Insurance starts to put more pressure on, the commercial world when there's recession in terms of fire safety. The world is not stopping growing. Globalization and urbanization is continuing regardless of what the economy is doing. People are continuing to breed and will continue to have babies forevermore. And people are not dying because medicine is getting better. So as people are living longer, there's more and more people in the world, therefore more houses, more cities. Cities are getting bigger, which need more fire trucks, they need more fire equipment. And the only way they can do that is by being smarter, modernizing, and buying more equipment. Whether they like it or not, that's just the reality of it. So it's not like people are going to stop breeding because the economy is in a bad position. It's just the reality of the situation. Therefore, our fire truck business is not, let's say, not totally, I say fire truck business is a broad term. Let's say the firefighting equipment business is unlikely to be directly impacted very quickly by a recession. If it's a long drawn out, sure, governments may, squeeze the belt here and there, but ultimately they still have to buy more vehicles and more equipment. And obviously this is where our products and vehicles come into, their own. That for the same money, they can buy a bunch of smaller our vehicles as opposed to buying a bigger truck, which will cover the same amounts of space. So, on that business, we feel we're particularly well positioned. If we look at like Replay, for example, our urban mining business, that's likely to also benefit, although one of the major outputs is copper, which obviously will feel because industrials will slow down, which will reduce the demand on copper for sure. However, the three main products, financially, are silver, gold, and platinum, which come out of the electronics and the Replay business. which typically would go up in price. Therefore, we expect that we're not going to be in a bad position. There's a surplus of supply chain, so we're not dependent on people saying, well, I'm not going to buy new phones. I'll just wait a year before I buy a new phone, before I have to scrap my old phone, which we crushed down. We're working on redundant stock from years ago. We're not shortage of stock. So again, that business is pretty well positioned for it. Even our investments in like Swifty, for example, as we said before in the beginning part of this session, with the higher having plenty surplus and money, part of Swifty's business, there's two angles. One is the VIP betting, which there's basically no shortage of money. Those VIPs are not going to stop betting. They've got plenty money, and their money is rolling in. So that area of the business I don't expect to be affected too hard. And on the other side of the business, with the predictions bets, we're not quite sure how that will fare in terms of a recession, but we would predict, because it's low value betting, people are not going to stop doing that. And also there's a high possibility that people are going to take the lucky dip on a Friday afternoon, hoping they win a little cash out that they can make some money for the weekend. So we're not particularly expecting that, the Swifty business on our investment on that to be reduced. That business is now starting to really get some momentum, and we'd expect that to grow phenomenally over the next, 6 months to a year and two, as they sort of start to file their earnings and, how they're starting to do. So, all in all, and the renewables business should start to, we're starting to identify and develop more and more renewables opportunities, which again should grow, especially with the pressure on oil prices. And we're particularly interested in defense. This war in Ukraine with Russia has opened a lot of opportunities. We don't know how long the war will last, but what what our intelligence, what our sort of strategic planning tells us is that Ukraine has depleted the majority of the world's supplies. So governments, whether it's US, Britain, Germany, whatever, have donated all this equipment, and they donated redundant equipment first to Ukraine. They donated old equipment to Ukraine, thinking they were just going to upgrade. And obviously Ukraine is sucking more and more equipment that they need. And with the supply chain issues, they can't buy new. So guys like America, Britain, Germany, France, Spain, whatever, donated equipment to Ukraine, now trying to replenish their supplies. They can't find supplies because the supply chains are also blocked. And every defense factory is overloaded with trying to supply the demand. So every country is pretty much going to have to restock. But also what's happened, which is really interesting, and probably nobody's really thought about this, or not many people, is that this is really the first war since the Second World War. The Afghan war, the Gulf War, those were different. That was a desert type of setting. It was guys on mountains running around mud shacks, in theory. Don't take offense with that. This is the first time that they're actually blowing up cities, blowing up airports. There's air combat. There's a lot of new things going on, which now is making, again, the military having to question their strategy, their equipment, their modernization. So there's going to be a humongous amount of defense spend, in my opinion, over the next 10 years. Like defense spend like we haven't seen before. So on that basis, whether it's intelligence, whether it's forensics, whether it's hardcore artillery, equipment, vehicles, autonomous, you name it. So, we very much want to get ourselves into that position where we can maximize those opportunities, which we're doing. And I think JP maybe will touch on a little bit more in his presentation, but certainly you'll hear more and more of that from us over the coming months. So, let's moving on. I think the midterm elections coming up now in at the end of this year will probably be one of the more important midterms that we've had over the last probably decade. So we're watching that space quite carefully. I think the overall market condition in general are obviously quite depressed, and certainly lower volumes. It's much drier, especially going into summer. It's going to be much drier. But I think this is not necessarily directly relating to any one particular scenario. This is a combination of a whole, let's say, the perfect storm, whether it's inflation, whether it's interest rates, whether it's, fear, whether it's, the unknown, whether it's the crypto crash. I think, certainly I encourage my board on a daily basis not to get despondent when the share price moves on the red days, because we know where the business we're building, we know where we're trying to go, and we have to look at the macro picture. While working on the micro picture, we've got to look at the macro picture. We can't let micro detail affect the macro strategy. So things like the traders, a lot of the traders who the settlement cycle on trading is generally quite slow. As you know, you sell a share today, that cash only hits your account in 3 days. So, a lot of those traders obviously operating on margin accounts. When there's suddenly a massive collapse in the market, like there has been over the last, couple of months, 3 months, a lot of those micro traders, let's say the more inexperienced traders, have been wiped out. Literally, their accounts have gone red. They're completely wiped out. They're gone from the market pretty much. So on those bases, that obviously affects the volumes, which naturally affects the pricing, and affects the demand on pricing. And we're probably not going to see those guys coming back for a while. And the second thing is, especially in the OTC market, a huge percentage of the traders dip in crypto as well as the OTC. Well, obviously, with the massive crypto crash, again, a lot of those traders have been completely wiped out. So now if you look at, the perfect storm for them, that had their trading accounts absolutely smashed. They're now probably borrowing money at a high interest rate to now survive with inflation. It's a recipe for disaster for, let's say that, the micro trader. However, I repeat as what I said before, the top end funds are buying up opportunities like you can't believe, and they'll continue to buy up opportunities, which is really the space that we want to be in. We need to make sure that we're very well positioned, financially, with cash, and certainly with financial support behind us to be able to execute on deals quickly and effectively on businesses that are cash producing. Our strategy becomes less speculative. Instead of investing in businesses that are heavy technology focused, that may be sucking some cash for the short term, but we're expecting to receive, a decent valuations in the medium term. Those type of businesses now will, I think, struggle to raise money, and you'll be able to buy them at a much let's say reviewed price. But what we really need to focus on is cash generating businesses, and potentially quality over quantity. So as opposed to doing 5 or 10 small deals, we want to probably do 1 or 2, or fewer but larger, more substantial deals of businesses that generate cash, that have very strong, robust business models, that are much more resilient to recession, which so far we're in a good position. Pretty much all the deals that we've done, bar one, is very well positioned for this. JP will talk you through more of that later. And sort of defense, and obviously with some of the deals under WSFT, oil prices are likely to continue to go up. I don't see that reducing in the short term, although recession on industrials may reduce price of oil. The demand still way exceeds, the supply, and no doubt OPEC will continue to control that supply. And going into winter in Europe and America, the demand on fuel is endless, as we know. So I don't see oil, again, I'm not an economist, but I don't see oil prices reducing substantially in the near future. Therefore, the investment strategy under WSFT, I believe, is well placed. So all in all, I don't think, although we're going into a pretty grim time, there's going to be a lot of grey clouds and, a fair bit of rain on us. I believe we're well positioned. I believe the team is strong enough. I believe we've kind of got to a point where we are mature enough as a business, and we have the financial backing behind us to be able to really jump on these opportunities as they sort of arise. So I'll pass you over to JP to talk you through a little bit more. And again, I'd like to thank you guys, everybody, for their continued support with us and their continued, let's say, hand-holding along the journey. Our journey hasn't even got started yet. We're just sort of getting going. And I'd like to remind everybody that, we are on a long-term journey. We are not interested really what happens today and tomorrow and the day after. I say that with, tongue in cheek. Of course, we're interested, but what we're really trying to build is a business for generations. We're trying to build the next GE, the next Berkshire Hathaway. We're trying to build the next generational business that, to your kids' kids, is a brand name that's been around forever. And, that doesn't happen overnight. That doesn't happen by tomorrow morning. It doesn't even happen by next Christmas. This is a gradual step. And, sometimes along that journey, there are decisions that have to be made that not everybody likes. There are results that come out that not everybody likes. But as we've said 1,000 times, and it's a massive print, which JP maybe show you later, the print in the boardroom, we have it printed in massive gold letters on our boardroom to trust the process. For sure, there's mistakes that are made from time to time. That's like life, that's human beings, that's any business. But we like to think we move pretty quick. And we like to think that our strategy is strong enough to deliver what we need to deliver. So, we'd like to thank you for your support and encourage you to continue supporting us and enjoying the journey with us over the coming years. And we wish you all the best. Thank you so much.
Hi, everyone. My name is JP, and I'm the Managing Director here at ILUS. And of course, following on from Nick, who will have given you more of a macro update, I will be updating you on some of the more specific areas within the ILUS business itself. It's quite rare that Nick and I are in the same office with all that we have going on. And we thought that since we haven't provided much of an update for shareholders in the last couple of weeks, we would use this opportunity, given that we're both in Dubai, to do this joint video updates. From the ILUS team's perspective, we've been incredibly busy with our growth plans, obviously traveling a lot as expected, but of course, all focused on delivering the milestones that we've been communicating. And recently, even my expectations have been surpassed in terms of where I see the business going in the next few months, and most certainly by the end of 2023. One of the main reasons we've been so busy and therefore also fairly quiet is that we've been working on deals that are far larger than we expected to be working on even 1 month ago. And of course, we're edging much closer to our biggest announcements, which means there's lots of meetings, lots of administration, lots of due diligence, and much more going on behind the scenes, which we can really only reveal the results of when we make the official announcements about it all. So from where I'm sitting, personally, I can see that we now have the potential to be a $1 billion business by the end of 2023. And so everything that's quietly going on behind the scenes is for us to deliver that. And one of the reasons I can sit here so confidently and project such huge growth potential is because the deals that I'm personally working on or am involved in that are on our deck have grown in size, where several are in the same realm as the likes of Quality International in the UAE. So as a result, we've been revising our acquisition strategy in favor of completing larger acquisitions. Nick would have touched on this, which cover many of the bases in terms of alignment with our plans. They have existing technology and patents in place with significant revenues already, and in some cases, huge revenues, and they have strong operational structures in place, which is very important to us. So I feel it's important to understand that we're revising our acquisition strategy in line with the current and foreseeable economic and political conditions. Again, Nick would have touched on this. The businesses we are acquiring are in the aligned manufacturing and industrial sectors. And as I mentioned, they have been delivering consistently high revenues already. So when one considers the uplisting strategy we've spoken about many times, we're acting in favor of acquiring high performance and reliable assets as opposed to more speculative technology, which is not delivering substantial revenue and sometimes requires lots of funding for growth. And in the current economic conditions, these businesses can be seen as risky by the likes of the investment banks, etc. Also note that in the current conditions, large deals are becoming cheaper, and even some larger companies are struggling to raise cash, which presents us with a great opportunity. Businesses are experiencing a cash squeeze and other factors like that, which presents us with an influx of opportunities where we are in a prime position to step in. And so with that in mind, in addition to the large agreed UAE acquisition, we're working on and progressing very well with, I might add, some very exciting US acquisitions, which have even larger revenues. And we're going to be updating on those as soon as we're able to. That said, we're also still working on the completion of some of the most well-aligned companies, some of which we've previously discussed. These include working on the completion of 2 wildfire acquisitions, 2 fire safety acquisitions, one in the UAE, which has the required licensing in place already to complement our existing acquisition in the region, that of BCD Fire, and another in the US to complement our water mist fire suppression rollout in the country. And then outside of the emergency response subsidiary, we are also working to complete the acquisition of an Asian battery manufacturer, which we've mentioned or touched on briefly previously. We have a signed LOI with the company, and we're driving that acquisition forward as part of our renewables subsidiary alongside Replay Solutions and others in the near future. We've also made several big strides forward with our defense subsidiary. Nick touched on the huge potential of the defense sector. In that space, we have 2 acquisitions lined up for completion. And in that area, we're bringing disruptive technology as well as some very substantial revenue into our business. It's in a similar model to our emergency response subsidiary. We are acquiring technologies which protect the warfighter in the same way that our ERT tech protects frontline personnel. And we're also acquiring technology which is already being used to protect countries and has renewable contracts in place in the US and in other countries. And there's, of course, further massive global expansion potential for those businesses. I feel that with our background and our connections in the defense space, the subsidiary is already following hot on the heels of our emergency response subsidiary in terms of deals. And personally, in terms of the technology, I'm most excited about the difference it's making to protect the troops, which protect us, whom we have so much respect for as a business, and I'm sure you do too. So that's, of course, very important to us, and of course, the impact that the technology is making to protect our cities from the likes of terror attacks, etc. It, of course, goes without saying that the contracts awarded for these types of technology are mind-blowing. So we are excited to be making a strong move right into the heart of this defense sector. And then I must remind you that not every deal goes ahead as we plan. Some companies do fail their due diligence, or as I mentioned previously, we revise and improve our acquisition strategy as we go along. I must stress, though, that we only don't proceed with a deal because we either have a better deal or solution or strategy in place to replace it. Because we have already achieved some success along the way, yes, I know we've only scratched the surface of it, but because we have achieved some success already, we have a huge backing and there's huge support behind us. So we are now able to complete much larger acquisitions, which in some cases means it then doesn't make sense to complete certain deals which require significant hands-on supervision and sometimes substantial funding. So I'd encourage you to keep that bigger picture in mind when you're analyzing the day-to-day details. We really are mobilizing a conglomerate. And if we only show you half the picture, it's of course not going to look as attractive as the full picture. For optimum shareholder value, the full picture must be revealed. And then just briefly with regards to Serbia, we will be providing a very exciting update quite soon. I realize it's been some time coming. However, we will be providing site information and visuals, as well as benefits of the deal and the capability it gives us. So within the coming days, there will be some significant political changes taking place in Serbia, which is impacting our deal in a really positive sense. And it's the reason we've been holding off on news regarding Serbia. Our deals are taking place at the highest levels of government in the region. And so it's not just one site for one purpose. It really has grown into so much more than that. And so you can look forward to announcements around that soon. And personally, I'm confident that you will be impressed. On the operational side of the business, we've been making some good progress. I know I've spoken a fair amount about the deals, but really a lot of my day-to-day time and effort is spent on the business itself, its operations, its sales, production, finance, marketing, recruitment, and the likes. In terms of ILUS itself, we've been working hard towards increasing our efficiency and getting maximum value from each member of our team. We're rolling out the NetSuite ERP platform across our existing businesses, including Bullhead Products and Georgia Fire and Rescue in the US. We're also busy hiring a new marketing director, which we'll be announcing in the next couple of days, and a communications manager. And we're also restructuring the sales side of the business so that each business in our group has its own focused sales representative or team. And we've also added a business development manager for our GCC region or Middle Eastern businesses. We're soon going to be adding a new general manager for the fire safety businesses in the Middle East because they're growing fairly rapidly. And next week, I'm also starting the process of hiring a CTO, a Chief Technology Officer for the business, who will lead the huge production scale up that we are already busy with. That's being rolled out here in the UAE and Serbia, and of course in the US. And then it'll also link up to the other locations in line with our upcoming acquisitions, which are taking place in various locations globally. Beyond that, we're also making important additions to our board, which we will announce in due course. And Dan Peters, our ERT CEO, is also going to be making some important additions to the ERT board in the US fairly soon. Again, then regarding our Q2 performance, those figures will be out soon. They are very much in line with our forecasts, and so that is certainly something to look forward to. Regarding the ILUS audit, which we've spoken about a few times, that should be completed in the next couple of weeks, at which point we'll be ready to become fully reporting, complete our name change, and be in a position to uplist to the OTCQB. We will then very soon also update on the option for shareholders to lock up shares in a preference category, and that update will likely take place in conjunction with other very important milestone announcements that we already have lined up. And then finally, when I'm back over in the US, I will do a video with Dan Peters so that he can introduce himself to you and talk about some of his plans and his progress that he's been making. I also plan to do a video with Carsten Falk, who is the current Wikisloft / Quality Industrial Corp CEO. Carsten is obviously working closely with myself and Nick on the ILUS front, and we will announce more on that fairly soon. So I think that covers most of it for now. In summary, I'd say, that we're right in the middle of our most exciting, but also our most challenging phase as a business. But I'm pleased to say that we're coming out on top in terms of achieving our milestones, and not only our growth potential, but more importantly, the actual delivery of that growth. And that's really skyrocketed. So I'm most excited about the moments when I can show you the full picture, which, as I said, is far more attractive. I know that the next few weeks and months of this journey are certainly the most exciting thus far for our business, and ultimately our transformation from that small company on the OTC towards a global conglomerate is coming together really well, and should be pieced together by many in line with our upcoming deal completions, our Q2 results, our audits, and much, much more. So we're well on track towards far greater things. And so I'd like to thank you for joining us on this journey so far. And for now, I really want to thank the shareholders for your continued support. And I trust you've enjoyed this video. I hope you found it impactful and useful. I'd like to wish you all an enjoyable and a safe weekend. Thank you.